Hello everyone, this is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for joining me. This is being recorded on the early evening of Monday, December 9th, 2024. In this video, just going to talk a little bit about silver and why it will be the best investment or asset over the next 10 or 15 years, but I'm using 10 in the title because that's more catchy. So only got a couple of charts. Let me get right to it for this edition of Macro Mondays. Okay, so here we're looking at charts going back 100 years. So we have silver here. This is monthly data, by the way. So silver right here. This is gold against the 60-40. Mark the key turning points here when it broke resistance. This is silver against the 60-40 here. And this is silver against the total return of long-term bonds. So what we see for silver, and again, I've talked about this in past videos, so I apologize if I'm repeating myself. The bullish signals with respect to gold against the 60-40, you can see here, late 1971 or the end of 71, and then here, the end of 2001. So those were the bullish signals. And they actually coincided almost exactly with lows in the silver price. You know, looking at the silver chart, you'd say, oh, this is a major low, maybe here. Definitely here. So definitely here and here. These were the two major lows historically. And what do you know? Coincided with gold breaking out against the 60-40. So we know that is likely to happen again. The hope is that it happens in the next few months or sometime this year, and not that we have to wait a couple years for that. But, either way, when that happens, it's obviously super bullish for everything precious metals, but silver is a leverage play. So that means even more bullish for silver. And so from these points, silver gained 29x here and 12x here. And so, even if, let's say silver goes down a little bit and there's a bear market in stocks or a sharp correction, and the signal doesn't happen until or when silver is trading, at 28 or even 25. You take a 12x times 25, that's 300. Or you even take 20x, which is in between these two, that would give you, times 25, that's 500. That's 500. That's massive, people. And, why this bull market was so much bigger. I did a video on this, or maybe I didn't. There's two reasons why the 70s bull market was much bigger than this one. The first is that in the 70s, gold and silver, they broke out to new all-time highs, at the beginning of that secular bull market. Versus here, they were coming out of a huge bear market, so they were climbing back, having to overcome all this resistance here. Silver never did. It peaked basically when it got back to the high. Gold, at the end of it, it was able to break free. But so completely different than the 70s when at the beginning, gold and silver broke to a new all-time high. Then they had many years to run. So we are going to repeat that. We've already done so with gold. Silver is coming in the next few years. So that's a big reason. The second reason why it was bigger is this bull market here, the competing assets for precious metals are stocks and bonds. Only stocks were in a secular bear in the 2000s. Bonds were not. They were still in a secular bull. So here, if you follow my work, 1965 is when bonds broke. So here, bonds and stocks were in a secular bear. We already know that bonds are in a secular bear now. It's just stocks that will eventually follow. And so this is silver against the total return of bonds. And we can see, it crept up here. Silver did have a sharp move lower after the 1968 peak. But this low here, it was still well above these levels here. And the same thing is happening here. We can see, look at the move in silver against bonds. Clearly it's well off the bottom. So that shows a similarity to the 60s, late 60s, I should say, very early 70s. So there's that. That's why I'm thinking that this time around, we're going to see a move closer to this rather than closer to this. And again, you look at where silver is now. That's putting silver in the hundreds of dollars, towards $1,000 an ounce. Okay, so let's look at silver against the 60-40. Look where it is now. This is a monster historic double bottom, people. This was an all-time low here. It's gotten very close to that. Similar to gold, we need to see this move up, which will trigger a secular bull market and a start of a moonshot rise in silver. So it hasn't happened yet, still going like this. But again, people, we're looking at support. We're looking at 25-year support. And I say again because this was similar to the 70s. I mean, if you look at silver against the 60-40, I could have put a line here where it had come down to levels very similar to here. So that's another similarity versus, the silver against the 60-40 bottomed at a really, really long-term base of support. So we're seeing the same thing again here. And so this could continue, or we could see a breakup like that sooner. I think we'll see that sooner rather than later. That's the context with respect to silver and silver versus everything. Now, let's get into my final chart. And I apologize, I did not change the title here from the old video. Did I change the title of this one? I did. Okay, so ignore this title. This is the title, Silver against the S&P 500. And this is inverted because it looks a lot better. So this is really the S&P divided by silver. And so you look at the two historic peaks, 1920, 1980. This is around 6. You could round up and say this was 3. 2011 peak was 28. Now we're somewhere in the 190s, or maybe we're at about 200. And if you're looking at gold against the S&P, these peaks in gold in the S&P, I mean, this one was, I think, around 7, 8. You had a lot of peaks here that were around 4, 5. So you think about where the S&P is now, 6,000. It's going above 6,000. A peak of 4x the S&P. That would put gold at 25,000. And consider, if you look at the silver gold ratio, three times in the last 100 plus years, you have seen lows right around 18, 15, 16. So if you're looking at 20,000 gold and a major peak for precious metals, you can get to $1,000 silver. Like, that is not out of whack when you consider historical peaks. And I think gold rather is going above 20,000. I think it ultimately could go to 25, 30, 40,000, something like that. And so my 15-year target for silver is $1,000 an ounce. But let's just do some math. So we're at about 30 now. If let's say we pick a peak of 20, the S&P, so silver's at 30, the S&P is about 6,000. So a peak of 20, that gives you $300 silver. That is about a 10x from here. If we get a historical secular peak at, let's say, 15, so what's 6,000 S&P divided by 15? That's $400 silver. But of course, looking at the chart of silver, we know that we have this, it's technically, I mean, it looks like a cup and handle, but it violated some of the tenets, but it is a super, super bullish base. I mean, this will be the second biggest breakout of all time. You just see a huge move like that. It's going to go into the hundreds of dollars an ounce. And so you have the perfect technical setup. You have the valuation setup, looking at the ratio and all these charts. And once you get gold breaking out against the 60-40, that will confirm a new secular bull market in precious metals, and everything will start moving up. And so the next 10 years, maybe 15 years, 12 years, 13 years, looking at that, it's going to be hard to find an asset class that will do better than silver. You can start hedging for conventional investors, non-gold bugs who are watching this video. When gold breaks out against the 60-40, that's when you can start buying silver and really accumulating it every month. So that's it for the video. Not much else to say, but I'm super bullish on silver for the next 10 to 15 years, and I think it's going to be the best asset class. And we're waiting for that bullish confirmation, gold breaking out of the 60-40 and silver breaking out against the 60-40. Again, that's it. Leave a comment. Let me know what you think. And thank you so much for tuning in. I'll talk to you guys again in the next video.